Okay, we're on. Good afternoon, councillors, council staff and press. And good afternoon to all the people watching this from home. Murray, our external member, welcome as well. The first part is apologies. I've got two, Councillor Cameron and Mayor Brown. Do we've got a mover and a seconder for those two, please?
I'll move those.
Councillor Macmillan. Everyone in favour, please say aye. Extraordinary business that we know of. None. Declaration of interest. None. The minutes. So, are there any alterations to the minutes of the 3rd of September 2020? If not, can I have someone confirming the minutes of the day? Murray and Councillor Wilson. Anyone in favour, please say aye. Aye. Against? Carried. We get two reports, and the first one is the Nikkei Gross Chinese market carbon settlement. You all have it in front of you. It's a small wee report. Are there any questions? Are there no questions? Oh, Councillor Stewart. Wilson. Oh, sorry, John. Councillor Fleur.
Thank you, Mr. Chairman.
Thank you.
Tell me, what does the difference of having an historic Category 1 listing make? Obviously didn't help the application for funds.
Paul, would you like to answer that, Paul?
So, Mr. Chairman, well, it was good news that we got $50,000 and out of the 65 that we applied for, and as the report said, no one got their full amount. So, yeah, it was a good outcome. It just wasn't quite as good as we'd hoped for to get the full amount. So, Category 1 listing does recognise the importance of that site. So, yeah, I can't say much more than that.
Councillor Wilson.
Thanks, Mr. Chairman. You read the second paragraph. Conditional approval was conditional on the project obtaining 65,000. Well, why did they? That's why we went ahead. Now they've backed out.
Mr. Chairman,
Yes.
note that when we came originally with the original report, it was we had already $65,000, 40,000 of council money plus $25,000 of poll tax money, and the council approved that. We basically said if we can get $65,000 as a 50-50, then we will go ahead with the work. We haven't gone ahead with the work, so the going ahead of the work was based on us getting $65,000, and we didn't get it. We got $50,000, so we haven't started the work. We're just waiting. We can't go ahead until we get another $15,000 because we can't meet the recommendation that came from the previous council meeting.
So basically we have to fund $15,000 out of our own coffers to get it going forward.
Can I just ask a question?
Oh, sorry.
Very loud.
Councillor Macmillan.
So will this be the last funding that's required for this project?
Mr. Chairman, it's the last funding required to remedy the buildings. There will be other works perhaps going on with plaques and with walkways and things like that, but this is the last money required to do the remedial work on the buildings.
Councillor Lufford.
That was the question I was going to ask, but obviously it's going to be ongoing and yeah.
Yeah, if I'm correct, the $130,000 was basically for the basic restoration, making sure it was all safe, so you could walk past it. And I think we're halfway through that. So to finish that off, we need the 65,000. 50,000 we've got as a gift, and the other 15 we have to be the givers. If there are normal.
So after the completion of the work, what's going to be the requirement? Is it like the gift that keeps giving and we're going to be asked for more money all the time to complete the whole site? That's my first question. And my second one is there any risk ever that the family could want to sell the land and take it away from us? Is that a long-term risk after us investing money into it?
I will ask the question, Paul or Hamish.
We don't have long-term ownership. We don't have ownership of the site, so the family could look to change, but they would have to get some agreement amongst themselves. There's been absolutely no indication that they would consider that. They're quite happy with what we're doing here and very supportive of it. The issue about whether it's ongoing costs, there are still, my understanding, some money to be spent on developing walkways and plaques and signage. Some of that we'll be applying for from other sources, and some of it may just have to be picked up as part of the open spaces cost, but it won't be very large. My understanding is it's not a lot of development that's actually going to go there. So effectively this will be the bulk of it.
Thank you, Paul. Hamish?
Just to comment on Councillor Rawlinson's question, of course the heritage listing sits with the property, so even if the current owners were to sell or change the ownership, that doesn't diminish the heritage listing, so that stays with the property regardless of ownership. Yeah.
Councillor McMillan.
If there's no other questions, I'm happy to move. I think we've received 25,000 from the poll tax grant in this, so I think we need to move forward and complete the job.
So basically the recommendation as it stands that council approves an additional budget of $15,000 from the property reserve to make up the shortfall in the funds required to complete the restoration of New King Bros Chinese Market Garden Settlement buildings. Do we have a seconder for that? Councillor Fuller? Thank you. Any debate? If there is no debate, then I will put a motion. Everyone in favour, please say aye. Aye. Against? Carried. Thank you, councillors. The next item in open meeting, if I can find the right pages, and for only 4 pages, but I can't even find it, the financial variances report. Rachel, welcome. And we start page by page as we've been asked. It's on my page number 2, and it's on my bit of paper here. Page 3. Page 4. Sorry, yeah, I've got on.
Just on that finance income, the negative,
Which page are you?
page 3.
Page 3.
What's your thing?
Curious as to what.
Question of finance income, is
What's, yeah, just I'm sure
There's a question.
I'm not sure off the top of my head. I'm going to have to look into that unless Paul knows what makes that up.
Yeah.
Do you know what makes up the finance income line, Paul, off the top of your head?
I was just curious as to why it was, that the income was a negative number.
What's this page, sorry?
Page 3, 4th line down, the actuals finance income is a negative number. sure it's self-explanatory.
Yes, yes.
The live recording cannot pick up.
Okay, sorry, my, yeah.
I was going to move to that, is it?
Okay, the whole thing is gone wrong. Can we go? Right, Stuart? Yeah, my apologies, I saw executive number 1 coming up before you, Councillor Wilson, so that's the reason I went there, but it was not the right member. So, Councillor Wilson?
You answered Mayor Murray's question.
No, we couldn't hear it, so we start again. So you're the first one.
Hello.
Yeah.
My question on page 4, it says in the heading, red, look for red for a major variation. To me on page 4, that's a natural. Is that a variation? That's what we've spent 14% of 15 million. 13 million is not a variation. That's surely that's just a normal part of it. A variation to me, if we'd have spent 1 or the whole lot, that's a variation.
So, Mr. Chairman, the idea of a variance here to report is one, we only report one that we think is permanent. So if we've got large variances there, we're reporting against a full year. So in August, you're going to get just about every column is going to be a variance because we are reporting against a full year. But we only report when people predict that it's going to be a permanent variance. And the comment I'd make is it's very hard at the start of the year to predict a permanent variance now, unless you know, for example, that you were having a project that should have started in July, hasn't started till, say, September or October, and you know you're not going to spend it in the year. Then you'd mark it as a permanent variance now and we'd explain it. But otherwise, it's not going to get explained if it's not marked as a permanent variance. So the early reports are there, but very few, if any, are being reported as permanent variances at this stage. But you would expect during the year that when they do become apparent as permanent variances, managers would mark them as such, and you give an explanation.
Thank you, Paul. Councillor Fuller?
Yeah, I think the variances are almost information overload, which actually tell you it's not a damn thing. But what you're better to look at is the percentage of forecast. And what we're 2 months into a new financial year, which means that if we're over or under by 16%, then we have got issues. But I mean, the way I look at this one, I don't have any questions at all over it.
Thank you, Councillor Floon. Paul?
So I can ask
Murray, you want to ask your question? And just push, just push the button. Right, you've
Is
got
that
it.
working?
Yep. Yes, it is.
So my question, sorry, was on page 3, 4th line down in the actuals. Finance income is a negative number. Just, I'm sure that's self-explanatory for you guys, but it looks odd.
Yeah, through Mr. Chairman, what I suspect has happened is we've accrued up to 30 June income, and we've put the reversal back through, and then haven't done the monthly accrual afterwards. So we've accrued probably interest income owing at 30 June, and so we've accrued that back in the previous year. We've put the reversal back through, and we haven't done another accrual for the first 2 months here, and hence it's negative.
So we've got a 300 something grand variance to the bottom line for the month.
Yeah, and what I would expect is that we probably haven't received that income yet that we accrue, but because we've got the reversal back, we've done the reversal straight away, we still need to accrue for interest income for July and August, and we haven't done that, hence it's in negative. Not sure.
And you've only just let us know next time, or if that's not the reason.
Yeah, we should have put an accrual through for the interest earned in July and August, and we haven't done it. So we've got the reversal from the previous year, and we haven't put the next lot of accruals through.
Yeah. Councillor Fuller. Oh, sorry.
Yeah.
That's what it is. So.
Yep.
Councillor Fuller.
Oh, basically, Paul's just answered the question that there should have been an accrual done at the end of the period for the interest which has been earned, but has not been cashed in yet.
Thank you for that. Page 5 on Stella. Page 6. Page 7. Page 8. Page 9. Page 10. Page 11. Page 12. Councillor Wilson.
Thanks, Mr. Chairman. District promotion, why have we spent 76%?
Through Mr. Chairman, the district promotion is now the payment to EMC, who have entered into the contract with Christchurch, New Zealand, and it's paid in a much more lumpy fashion than per monthly. Thank you.
Thank you, Hamish. Page 14. Page 15. Page 16. Page 16. Page 17. Sorry, I've got Councillor Cameron, but go for it. Sorry, Murray.
It is me, is it? Oh.
No, it's you.
So
Sorry.
understand the answer on the question in terms of the permanent variances and the process, and them all coming through no at this point. When would we expect to see those sorts of permanent variances if there were signalling? If there was signalling beginning to come through, when would we expect to be seeing that? I mean, I know we're only 2 months through the year, but is there a sort of understanding, communication around when things start to get communicated in terms of we are off track or beyond budget for the year? Is that?
Through Mr. Chairman, my expectation would be that the September report, if there's obvious delays in work or over/under expenditure or revenue, that should become apparent by the end of September. You're a quarter of the way through the year, and with major projects, especially in capital, you should be able to start identifying whether you're going to be on target or not. So I'd expect September that there may well be permanent variances, if they exist, would start to appear.
Thank you, Paul. Page 17, I'm still on. Page 18. I've got Councillor Falloon.
Yeah, I was just looking for an explanation of what the debt premium discount and the LGFA is that break fees, or is that because we've borrowed at such good rates, and or what is the basis of that amount, please?
Through Mr. Chairman, the premium discounts are when you buy at a rate that is not today's market rate. So you've, how do I explain this? If you're taking up, I'll flip it to the investment side. We also get premium discounts when you buy bonds because it's probably easy to understand. If today you can invest for a year at 3%, and you buy a bond that is giving you 3.2% because it was fixed, you're buying it off someone else who had it, then you're going to pay a premium for it because you're getting a better market return at 3.2 than you are at 3, because that's today's interest rates for that same term, so you would pay a premium for it. And so you pay extra than what its face value is. So if you're buying $1 million investment, you might pay $1,020,000 because that represents you're going to get a better return than the current rate. The same as on debt. If I flip it on the other way and you're taking out debt and you're taking it out, effectively purchasing debt that's already there and already got a interest rate set, you're going to pay a premium or discount depending on what the borrowing rate is at that time. Because you're not borrowing at the market, you're borrowing using a financial instrument that's already got its interest rate set. So that's what the premiums and discounts are, the difference between its face value and what you're buying it at. That's it.
Yes? You go. Sorry, you still, yeah. Go for it.
I note that we've got two loans there.
Oh, the lights go off again. Sorry. We go to Stuart first.
I know.
Sorry. Okay.
I note that we've got two loans here amounting to $15 million that don't fall due till the 15th of May next year, which we're obviously paying quite high interest rates on those. Those premiums and discounts, does that include the break fees if we were to borrow and repay those loans or not?
No, Mr. Chairman, no, they don't. If we're trying to break one, we could try and do that, but that would be factored in, of course, into the term. So when those come back up, especially through the LGFA, we tend to hold them. So when they come up next year, the course interest rate will be considerably less, but we haven't broken too many. Yep. Of course, adding to that with interest swaps over the top of those, so you might actually be getting a better deal than what those rates actually are with the interest rate swap.
Thank you, Paul. Councillor Wilson.
Yes, those yields on those later floating rates we've got, do they equate to what you were talking about before? We can't get money at 0.6. Is that a variation between what somebody else has taken and what we take?
That could well be. Our borrowing rate at the moment is 1.2, 1.3, something around about there, depending on whether you're taking floating or you're trying to fix it. If you're fixing it, you're going to pay a bit more than floating.
Thank you, Paul. Page 20. Councillor Falloon.
I note that we've still got an advance in there to EMC. Are we ever likely to see that money back, or will we have to make a decision at some stage about writing that off?
Mr. Chairman, it's likely to be written off. I have made the promise to sort that out, and I apologise, I haven't sorted that out. That was an arrangement for the transition between them being before they became a CCO, and it was to get their assets from the trust that they're in into a CCO, and I'll have to go back and reacquaint myself with what that was all about. It's been sitting there for many years since they became a CCO, and it's likely that I'll come in to get that written off. But I'll come back with a report on actually how it was created in the first place.
Thank you, Paul. page 21. Councillor Fulham.
Yeah, I'd just like an explanation of these graphs particularly on the rates debtors. I'm a little bit confused there. We've got two colours, one meaning the August 20 rates and the June 20 rates. It seems to me, am I right in reading it, that we've got about $500,000 worth of rates that have been outstanding since 30th of June this year. To me, I'm not a great man on rates. To me, I would just like to see the rates that have been outstanding for 90 days or more and what action is being taken on, collecting those rates.
Or Rachel?
Through the chair, we can absolutely make that change to the reports. I'm not sure whether it would come through for the September ones or the October ones.
Thank you, Rachel. Murray.
Thank you for that. The 30 June 2019 reference there, that was what confused me on that bar graph. Just
Through the chair, that could possibly be because the green columns are the June 2020 rates. So that would have been referring to the year before. So I think it's just a mismatch because we're talking about two financial years within one graph. And so I think it's probably just a mismatch with the... I think for the green column, it should be June 2019. I think for the blue column, it should be June 2020, but I can confirm that.
Okay.
That makes sense.
Yeah, we've got June and July. Twenty-two is the last one I've got. No more questions? Do we have a mover to receive the financial variance report as we just went through? Oh, sorry. Yep.
page 20, we've got a significant term deposit with Westpac. Have we got a policy which says money has to be spread? Just thinking about concentration, I'm not suggesting there's any risk necessarily either. I'm just, if you understand the question I'm asking.
Through you, Mr. Chairman, we do in our Treasury Management Policy have a maximum amount with banks, and that has become more difficult as there's less registered banks. So at the moment we're opening up an account with another bank to try and deal with that, and also we are redoing our Treasury Management Policy to readdress the limits that we currently have, because we are having difficulty now placing those investments, and surprisingly there is quite a difference in rates between banks, and it becomes a bit awkward when you've got a significantly higher rate with say Westpac, but you can't put 25 million in there because it breaches our policy. So we have a policy on a maximum, and I think we're right at it with Westpac, so we've got no headroom with them anymore. So I'll be report. Yep.
Thank you, Paul, for the explanation. Councillor Wilson, are you happy to move it?
Please, I'll move.
Sorry. We've got a mover, is there a seconder? Councillor Macmillan, everyone in favour, please say aye. Aye. And thank you all. This is the end of the public meeting.
Sorry, Mr. Chairman, the resolution to exclude the public is in an open meeting.
That's what we're going to do.
I'll move the
Councillor
government
Wilson will do that.
I'll second.
Seconder. Everyone in favour, please say aye. Aye. Correct.